The saying, the source of all evil, probably rings a bell. It's true that being in debt may make you feel like your life is over while you're trying to get out of it, and that your debts don't wait for you but instead continue to rise daily since no one loans money without charging interest. Despite this, the typical American family owes over $5,300 in debt. Total US consumer debt is approximately $15 trillion. The gross domestic product or GDP of the United States is a little over $21 trillion. This figure represents the whole economy. However, I have some good news for you. This number is sometimes depressing. This is a controversial viewpoint considering that much of the debt we carry is subprime credit card debt. A mortgage, a vehicle payment, maybe some education loans, and you're probably thinking it'll be years before I've paid them off. What possible good could come from that? Let's examine how the already wealthy continue to profit from this to see how it might be used to our advantage. It may seem strange since one could wonder why a wealthy person could take on debt in the first place. The poor are meant to utilize it, but that goes against the grain of capitalism. With proper application, debt may be a very effective instrument. Give this video a thumbs up and let's talk about financial independence. 5 ways people make money with debt. Number 1. Going on a land. It may seem contentious, but it is what the trade is predicated on. Taking out a loan to launch a company is a terrible plan, and I wouldn't do it if I didn't have to, but there are industries, particularly more conventional ones, where it's your only alternative. To illustrate, imagine you're in the pen selling business. It's something that everyone needs, thus it's constantly in high demand. You could travel to China, discover a facility that makes that kind of pen at a reasonable price, purchase a container full of pens, have them sent to the US, and then distribute them to your customers there. These days, however, you can accomplish it entirely online with the help of marketplaces like Alibaba, save maybe when dealing with more complex products that need a trip to the plant in question. For the last 50 years, this has been the standard operating procedure. Once a customer sells a product in the United States or elsewhere, he pays the manufacturer and borrows additional items to restock his inventory. If you work with the manufacturer, you're essentially saying, "You know how to make it, so let me help you sell it." The difference between what I sell it for and this is what I consider my profit. The genius of this tactic is that it does not need to use any of your own cash. That's why being able to sell is such a valuable ability. Number 2. Mortgage refinance. Loophole-filled real estate debt is ideal. No mortgage, additional taxes. Rich folks usually have numerous mortgages to receive all those deductions. Remember every tax dime. Another way wealthy people grow wealthier is through saving, which earns $1. Here's a more practical technique. Let's imagine you've saved $200,000. That's a lot of money. But if we're being honest, you can even purchase a property up to $800,000 since you have to make a 20% down payment. But here's the secret. Wealthy people become rich in real estate. Let's imagine you locate a $500,000 house that needs a lot of work. After renovating it, people want to rent it, increasing its market worth from $500,000 when you acquired your first mortgage. Let's assume it grows to $700,000. Let's suppose you're planning on getting an 80% mortgage, but 80% of $700,000 is $560,000. $400,000 goes to the initial bank that provided you the first mortgage, $50,000 goes to the refurbishment, and you're left with an additional profit of $110,000. You earn $110,000 utilizing that, and you're left with a property that you can renegotiate and produce passive income on. Real estate investors do this often. Can you see that awful now? Answer it in the comments below. Number 3. Mutual funds. Hedge funds enrichments the affluent. They utilize unpopular tactics against mortals like me and you. We try to forecast which firms will expand and rise in value and invest our hard-earned money in them. While hedge funds often take a different strategy, hedge funds aim to profit when firms fail, like GameStop, but the internet caused them to lose over $13 billion. How debt-based hedge funds profit? Assume you predict a stock, such as Facebook, to decrease because you know that Apple, the manufacturer of the most popular smartphone, will declare next week that they will no longer allow applications to monitor your online activities, such as Facebook or Instagram, and would value privacy. It will severely hurt Facebook's economic model, so you contact your broker to borrow a $100 share of Facebook stock and immediately sell it on the open market. Congratulations! You have $100, but all your broker won Facebook stock. If you're correct, Facebook's stock price will decrease at $70 next week. You purchase one Facebook share for $70, return it to your broker, and pocket the difference. You earn $30 from a full stock. In reality, it's tough and hazardous. Incorrect? What if prices quadruple overnight? Return that one Facebook stock to your blogger and pay interest for borrowing it. To return the stock to your broker, you must pay $200. You can only lose your investment if you purchase a stock and sell it when it increases. If the stock price keeps rising, your losses will too. But if you have 100 analysts working for you, you may earn a fortune employing this approach. Number 4. Currency trading. The link to our Forex video on this topic is provided below. Please refer to it for more explanation. Foreign exchange, or Forex, is a currency trading market that facilitates global economic activity. Please feel free to make use of us. If you want to pay your workers in China with US dollars, you'll need to acquire Chinese yen first. There's a market where individuals and businesses may buy foreign currency, and the price of currency changes depending on several variables. Change based on various factors. For instance, a hike in interest rates by the Federal Reserve, which would restrict the supply of dollars in the market and make the US dollar stronger than foreign currencies. You may earn money in this market by accurately anticipating which currencies will climb or fail. What makes foreign exchange markets unique is that traders may borrow $100 for every dollar they invest. Number 5. Credit rating. The ability to borrow money to fund expenditures is a key component of every successful business or entrepreneurial venture. It's something that almost every company does, so you can stop worrying about things like high interest bills and start thinking about things as they are. It's terrible to be in debt, but if you want a better interest rate on your credit cards, you need to reduce the lender's risk. Just how do you do that? You establish credibility in the lending community as a responsible debtor. A huge amount of money, maybe trillions of dollars, is sitting in banks, just waiting to be borrowed. We have already shown that banks can manufacture money out of thin air even if there is no money. Like what you saw? Please give it a like, and if you're new here, subscribe and enable alerts. Please enjoy your stay on the channel dedicated to teaching you all you need to know about making money in the stock market.